And was an interesting trading day yesterday as well. We managed to see an uptick of a good 100 points actually from the session lows within the last final 90 minutes. But yes, it was the most sedate of expiry days that we've seen in a very, very long time. Good to see that the broader market liveliness continued, and yesterday as well, it was no different. The broader markets managed to outperform what the benchmarks did. And yes, FIIs continue to be buyers in this market. Fourth straight session of buying when it comes to FMCG, many stocks sitting at a new high, the index as well at a new high. But the laggards, they were PSU banks. But clearly, it's a sign that there were dip buyers, and at any given dip, you will see a rescue coming in.
May was very different from April, and I think June would be very different from May. What were the high points for the month of May? More than the Nifty or the Bank Nifty, it was the mid and the small cap stocks, the list of 52-week high, the combination comeback by the retail investor, open interest addition by FIs and by DIs. Those were the highlights. The reason why June could be different is because for markets to go higher, you need a combination of three factors. You need a trigger, you need an event push, or you need liquidity. There are no large calendar events, both locally and globally, in the month of June. And there are no triggers which could also generate upside momentum. So then markets would be relying on technicals and on liquidity. On the liquidity front, everyone knows that markets have, FIs are back and DIs are here to stay. But for markets to go higher now and sustain new high levels, you need a new push. And I'm not so sure that where that new push, at least in the next 10-15 days, would come from. So I don't think there is anything damaging in the market. I think the summer rally of 2023, the bulls are just taking it easy. You will definitely, if you want to lean on the upside rather than on the downside. But the price action and the appreciation, what we've seen in the month of April and May, the pace is something which I think is reducing. And I think it is evident in the way how the FI positioning is moving. So what do you do in this market? Well, if you're long, you stay long. You don't cut your longs. You don't go short. But to assume that this is going to be like one of those months where you're going to get another 4-5% on the Bank Nifty, 2-3% on the Nifty, I think would be a far cry.
We've already seen outperformance though in the last two series. April, remember, the index itself was an uptick of about 4.5%. In the month of May, we've seen returns of about 3.5%. And if you talk about the Nifty Bank as well, in the month of April, that saw a big jump of 7.25% actually, though in May it was a lot more tempered, 2.5%. So let's see what banks actually do and whether they can push the markets higher, because FMCG, unfortunately, while it's been one of the biggest gainers in the series gone by, that doesn't have as much weightage as banks do. So let's see whether they can pull the trick or not. But yeah, Avan, having said that, a lot of stocks at 52-week highs.
And actually within the FMCG space, who would have thought the most memed stock, the stock that really got a battering from a lot of shareholders, has done nothing but seen a wonderful journey since the start of the year. And that is ITC, hitting its 52-week high. It's set to continue its fifth consecutive week of gaining streak. And it's been the best performing stock as well in the last 1 year, gaining about 60%. And then added to that list, there's also Britannia within the same sector itself, and another nifty gainer has been Bajaj Auto. Nikunj, what do you have to say about some of the stocks that have had a terrific run and now are perched at life highs?
No, so it's a nice smart combination, with the exception of, let's say you take out the IT index. I think rest of the market is quite vibrant. Let's look at that list. Nifty 50, Bajaj Auto, Britannia, ITC. It's an auto company which has made right up there. It's an FMCG company which has made it right up there. Look at the stocks within Nifty 500. Delta Corp, hello. Who would have thought Delta Corp would actually be right up there? You got an NBFC stock, L&T Finance, GSPL, IDFC, which is the holding company of IDFC Bank, NBCC, it's a construction company. So the good bit here is, and this is what I think would be the highlight for the month of June, is that markets are rotating wonderfully well. If Nifty moves in this range, which I think is evident, I don't see there is anything negative in the system which will really break the markets down. If at all, I think domestic institutional investors will now be inclined to buy into more mid and small cap stocks because they were sitting on cash and they have to catch up. I would imagine that the month of June really belongs to A quality mid cap stocks which would be propelled by retail, HNI, and by domestic institutional investors. It's very good what's happening in the market. The list of 52-week high, it's not just restricted to a sector. Normally what you would say, IT chal raha hai. You would say price action in defense. You would see price action in large banks. That's not the case. Bajaj Auto, Britannia, ITC, nothing in common. So I think that's a good bit. And the reason why that's happening, Aisha, is because domestic institutional investors are sitting on cash and markets are going higher. They have to catch up. So I think they are coming back. Retail investors, they also know that monsoon, that's not a concern any longer as of now. The flows are back. So they are also trying to jump on the momentum, so to speak. So I think the month of June would be sectoral rotation, new sectors coming in, and you would see quality mid-cap stocks really flying up.
Yeah, absolutely. Okay, well, talking about a global counterpart, that's Wall Street as well, and look at the kind of mood that you've seen over there. Individual companies making fresh highs and taking actually Wall Street higher than that. Look at the gains, for instance, about Nvidia, which is world's largest semiconductor chip maker. Now, up until last year, it was all about auto components and how semiconductors actually come in use for that industry, but well, not. It's also artificial intelligence chips that is why these companies and semiconductors are further in demand. So look at what Nvidia has actually done. The stock has rallied 38% after the bell overnight and has added $200 billion to its market cap. So clearly giving a big leg up to the Wall Street price action as well.
It's $1 trillion company now. And how many $1 trillion companies are there in the world right now? I mean, you have Apple, you have Microsoft, there was Alphabet at some point in time, there was Amazon at some point in time. But here's a chip manufacturing company which, frankly, if you ask me, everybody knows Amazon, everybody knows Apple, everybody knows Microsoft.
No one knew Nvidia.
Exactly. I mean, I struggled till about 2 years ago just to get the pronunciation right. But the fact that Wall Street is telling you that we are backing a company which is in semiconductor and artificial intelligence, what it means for Indian companies, nothing, because you don't have, Tatas are planning to make semiconductor, but that's a long haul process and that's going to be part of a private entity. You don't have any direct play per se. But indirectly, if semiconductor manufacturing picks up, then you actually going to see a huge change in terms of supply chain. You will see a huge change in terms of how the manufacturing activity would move. So let's look at it this way. India is not going to be making manufacturing. India will not be able to move into a very high pedestal positioning in next 3 years in terms of chip manufacturing. But in US, you know that post-COVID, they've learned the importance of becoming self-reliant in chip manufacturing. If chips are manufactured more, who will benefit? Auto companies, manufacturing companies, and especially sectors like electronics in India and EMS, what we call them. Largely that's because if chips are available, a lot of supply chains would change. And I think that China 1 plus strategy, which is what markets are betting on, I think is evident now in some of the niche manufacturing players. So chip manufacturing industry coming back means the supply chain in the world would change. Chips which are going from Taiwan to US and from Taiwan to China now would be America to India.
Yep. And